Welcome today. We're so excited to have you here. I'm Julie Castro Abrams and the general partner at How Women Invest and also the CEO of How Women Lead. We've got an amazing conversation about venture investing and how wealth empower women hold today. Uniquely, big collective wealth can significantly influence and change the world we live in. Historically, women have been less visible in investment circles that's actually shifting rapidly. We have really interesting new data I'm excited to share with you. We are not just starting to play a bigger role as investors, we're actually taking more risk. We're demanding more accountability and responsibility, and we are investing aligned with our values. Today, we're going to talk about venture capital. This is the power play of who builds the companies of the future. So let me remind you, today we have 52% of the wealth, but there's a massive wealth transfer that's happening. And by 2030, women are expected to own and manage $30 trillion, which is around 60% of all the wealth. Now, the flip side of that is women founders only receive 2% of all venture funding, and it doesn't make sense. This is where the clear bias comes in. Women return 34% more for their investors. So if it's the best investment you can make, how come women are getting less money? That's what we're talking about today. And we're talking about how you can use your power and influence to change that. It's an exciting moment in time. We've never had this moment before. There are so many of us that are experienced operators, confident about our ability to invest, and we are stepping up to the table in ways that are unprecedented. So I'm so excited to spend time with you today. Gaby Darbyshire is here. She's the general partner at Dangerous Ventures. This is an early stage venture fund that's backing startups, building a more resilient future for people and the planet. Ugh, take a deep breath. Think about what that means. Like, we have got to be protecting our future. And that's for so many of us. I'm in my 50s. That's my responsibility at this life stage. Gaby and her team are focusing their investments on sustainable earth systems and technologies that help us adapt and mitigate the worst effects of climate change. Gaby, thank you so much for being here with us today. I am so excited to have this conversation with you. And we have a shared commitment of how, a countercultural commitment of how we are when we're together. Would you share the credo with the people who have joined us today?
Sure. First of all, hi, Julie. It's lovely to be here. Thanks for having me. So, your credo goes as follows. Number one, be fierce advocates for each other. Number two, say yes to helping and connecting each other. If someone asks for an introduction, make your first reaction yes. Men are very much better at this than women. Number three, we ask you to reinforce her voice. When she speaks up and is not heard, be her megaphone and ensure that she gets credit. And number four, maybe the most important one of all, you, every individual female out there, we should get out there and be more unabashedly visible. Build your thought leadership, network as part of your everyday workday. The old ways of being invisible for women is over, and there's absolutely nothing indelicate about standing in your power and owning your own voice.
Well, Gaby, thank you for showing up today and being unabashedly visible and standing in your power. Your power is considerable. It is really fun to get to spend time with you today. And I know, women are values-based investors. The women I know are so dialed into what we're about to talk about. So let's first, though, for anybody who's new to venture investing and thinking about stepping into this space, so many of us have, it has felt like a guy's game. We haven't felt invited in the past, but that's changing. In 2010, there were only 12 women-run funds. Now there are 300. There's a lot of us. We've got the infrastructure, and we're ready to treat you with respect, make it easy, demystify it. So it can feel intimidating for women to take the first step in venture investing. How did you actually start in investing in venture yourself?
Well, I mean, as you're saying, 10, 15 years ago, there were just fewer females around the table. And so
Yeah.
I was a founder and an operator at a startup, and I've been in the Silicon Valley system. And so I knew other founders who were starting companies around me. And they asked me to invest as an angel. And sometimes I said yes. And
Okay.
slowly I built a portfolio of angel investments of my own. And then I was asked if I would like to invest in a fund. And I didn't have that much money, but I had enough and they wanted to see me on the cap table. And so I said yes. And so slowly over the last decade, I built my own portfolio of angel and fund investments. And so that led me to learning more about sort of how this works and what I think works and what I think I can bring to the table. Now, to be fair, wouldn't surprise you to know that most of the companies that I invested in 10 or 15 years ago were run by men, and that
Yeah.
many women-led businesses around, or at least, let's put it this way, not ones that had enough early funding to really get traction. It's
Yeah.
not that we weren't starting companies, it's that they weren't necessarily getting funded, so they didn't necessarily last with the hard period at the early stage of a venture where you really need backing to see you through, the building and the go-to-market strategy.
Well, and
Uh,
it shortens your that I mean, when you know it's gonna be such a ridiculously hard environment, you change your vision and your view of what's possible. Like, you shrink your potential in those moments.
I feel like that's the thing that men don't do. They don't shrink their
Right.
dreams.
Right.
And I
Well, because 98% of the money goes to them. So, you
Right.
know.
Goodness,
Right.
if they were getting the rewards for the early risks that they take,
Yeah.
that women typically don't have access to. And that's how the wealth gap between men and women sort of grows wider with every passing year since you basically enter the workforce. And I thought, there's no reason why I can't do this. And I should be doing exactly the same thing as they are if I'm able to.
Gabby, you just mentioned that your beginning started with a combination. You did some angel investing. Would you define for the people listening what is an angel investor versus what is a venture investor?
Sure. I mean, when a company gets started and it decides to, well, first of all, it usually uses its own money, credit cards, maxes out your own credit cards. You bootstrap your company for a while. And then you go and ask money, usually from your friends and your family, because they're the ones that trust you. They can see your grit and your hustle and your perseverance. And they're the ones that really want to support you and believe in you. And then, so outside your initial friends and family, there are going to be people who take early stage bets in founders and want to see them succeed and like taking big risks early on because then they can get big rewards. And those are your angels. They're not institutional investors. They're not funds. They're not going to be writing necessarily very large checks, but they're going to be the ones who basically get you going on your process and on your journey.
So when I started my own investing, I did some angel investments. Honestly, people started coming to me and asking me, "Hey, would you put $5,000 in or $10,000 in?" And I mostly just picked the people I trusted, like you just said. Now, I didn't do deep analysis of the market and the investment vehicle that they were offering and all those kinds of things. I think to me, that's where venture is a little more right sized for women because it's a diverse portfolio. And somebody who really knows what they're doing is evaluating and negotiating and tracking on your behalf. When you think about your own portfolio of angel and venture investing, how do you, like, that's my view is it's a little less risky to do venture because you're not, and it depends on the venture fund you pick. You're not, you can get involved in the companies to a certain extent, but you do have a middle person, a middle woman in the middle.
Well, I think there's another point to add, which is that people always grumble about having to pay fees to venture funds, but at the end of the day, the venture fund is there to get the best possible deal flow they can.
Yeah.
If a
Yeah.
venture fund is looking at 500 or 700 or
Yeah.
1,000 companies a year in a particular sector,
Yeah.
going to get a sense of what's working and what's
Yeah.
not. If you
Yeah.
just not cherry pick, but if you just say yes to the person who comes to your door and give me money, by
Yeah.
definition, you're not seeing enough deal flow to know that you're going to get into the
Yeah.
best deals. And so deal flow is
Exactly.
key to the venture game. And the
Yeah.
reason people aggregate together and build partnerships, and then it's a team and a bunch of associates, is because they want to be able to see as many deals as they can and figure out over time what the sweet spots are and who's going to succeed, what the attributes are of successful founders. And that's very difficult to do if you're just an individual
Yeah.
investing.
Yeah, it is.
One of
So
the reasons why people join angel networks and things like that, because they get the benefit of other people helping them with analysis and the diligence.
yeah. Well, and in some of those angel networks, I would assert maybe you have to be a little careful with groupthink and over reliance on the people who are loud or act like they know the most. But I've gone through a couple of these traps myself. Okay, so you have this whole a combination of things you were doing, but you decided to start a fund and a fund focused on climate solutions. So can you talk about both the unique factors that played a role in helping you decide to start the fund, but also why did you pick climate? Like, is this a good investment environment to invest in climate companies?
Well, I wanted to be a VC basically because I have insatiable curiosity. And I want to keep learning throughout my lifetime about lots of different subjects. And because I
Yeah.
change my mind a lot about what interests me, I like the idea of being involved in learning a bunch of different things. I also want to help young entrepreneurs build successful businesses. I used to believe actually that being a specialist was really an expert was really the only way to be successful in life. And I used to feel, I think, inadequate because I was not a deep specialist in a particular area. And it took quite a lot of time and wisdom and just life generally to realize that being a generalist is a massively, massively valuable skill. It enables you to see a higher level picture. You can see how the pieces all fit together. You get to synthesize a lot of data points from disparate areas, and you can find a through line with real, critical thinking. And so in that respect, being a VC is a huge joy for me. And it's really an intellectual challenge because you meet the most brilliant and fascinating people every day.
Right? It's so fun. Yeah.
All of them are working ridiculously hard to fulfill their dream. And you get to play a small part in making that happen. And so
Yeah.
there's something incredibly rewarding about seeing your companies sort of thrive and succeed and being able to bring your skills as an operator, or as a lawyer, or as a banker, whatever your background is, into helping them on that journey. So that's
Yeah.
sort of the reason why being a VC suits me very well. And particularly climate. I mean, I think that's fairly obvious, right? There comes a point in your life when you think really hard about the contribution that you want to make to society. And for me, the most important thing I could think of spending the next 30 years of my working life on is climate, because without fixing these issues, the rest of the things you could work on are potentially irrelevant. I've been in the climate space on and off all my life. I mean, the funny little secret is I actually built an electric car when I was 16 years old.
Oh,
Famously ended up on a TV show in the UK and was allowed to drive it in the local town. I was a scientist at college. I was then an environmental lawyer. And all of that was sort of long
this
before I
is
got
in your bones. Like, this is your life's work. Yeah. Yeah.
well, why didn't you do it your whole life? I mean, one of the things is that I was really interested in a bunch of different things, as I said earlier. I'd actually invested in climate when I was in my 20s in wind farms, and I lost my shirt because at the time, the world had a very NIMBY, not in my backyard attitude and wasn't ready for it. And so they would never pass the planning permission. Turns out the company that had these wind farm sites, now every single one of them is a wind farm, but it took 25 years. And so I did some other startup wanderings, and I have some other things I'm passionate about too. But I always kept my hand in climate issues outside of work through my board work, basically. And then when I decided I wanted to become a VC, I was thinking about what are the causes and the things I've invested in so far, and what are the things I care about. And very naturally, that was where, what led me to climate. And it's been the same with my two partners in Dangerous, Ward and Mike, also have come through the journey of entrepreneurship and operating other companies and also come to climate. And we're thrilled by the fact that not only is it one of the most important areas to work in, but I actually think it's one of the places for best opportunities in the world. Anyone who says to me, I want to work in climate, but I don't know anything about it, my response is, well, are you a CPA? Can you do web design? Can you do QA? Are you a writer? All of those skills are needed for climate companies. And Larry, who's the CEO of BlackRock, said, well, the next 1,000 unicorns are going to be climate companies because they have to be. So I think there's no distinction between, climate is a luxury anymore. Climate is not only necessary, it's also an opportunity.
Oh, it's huge financial opportunity. And, more and more there's legislative action and other things that are demanding accountability for companies where they're needing more and more resources and providers. And there's also a lot of federal non-dilutive funding, like money that you can get from grants that doesn't take ownership stake, which is really, when you're thinking about both growing a company, but also as an investor in a company, that's great money to have if it doesn't take too much to get it.
Well, I think that's one of the reasons why it's so necessary. And climate life cycles can be a little longer than maybe a sort of frothy consumer business might be. And also with sort of the tech readiness level of a company coming into the commercialization phase, you need quite a lot of money to get it to that point. And that's really the purview of either philanthropy or academic research or government grants from all the different bodies. And so by the time a climate company has gone through its research stage, it's probably had several $1 million of non-dilutive funding and probably 5 or 6 years of research before it gets to commercialization. So the sort of life cycles are a bit longer, and I think there's room for different sort of flavors of finance at the different stages of the life of the company. That's quite different from maybe just a software business that's doing something in the consumer space, for example.
So you have two male partners on your fund. Do you approach things differently? Do you find that you have a different way of bringing things forward, or?
Well, the irony, of course, is I think that most people would say, and I think they would say that I'm tougher than they are. And in other words, I don't think
I mean, women are super disciplined, responsible investors. They're not using their gut. So yeah.
But there is something about gut, and there is something about, I always like to say, I think because women have had to do more with less for so long, they sometimes can be a little bit more like cut to the chase, which can be impatient. I'm sure it can be just as frustrating if it comes from a male or a female when you feel like you're being too fast or too far.
Yeah.
But I believe that there's an innate skill that comes with having to always push a rock uphill.
Yeah.
It does make you stronger. It does make you more resilient. And that means I wouldn't, bet against someone who's decided to get forged in the pit of fire, as it were.
Yeah. Well, we're lucky to have your leadership and your commitment and the fact that we get the benefit of the hard years where you learn the hard lessons and now the environment's ready for you to really go to town. So, you're a general partner, which means you're in charge of this venture firm and the investment strategy. Why do you think it's so important for women? What is the role of women in this ecosystem in your mind?
Well, I think generally speaking, whether it's angel investing or fund investing or whatever it might be, the sooner you start investing and compounding your rewards, the faster your wealth will grow. That's a very fundamental mathematical
Yeah.
tenet. But every financial advisor will tell you to start saving early on and put money in an ETF. Now, you do have to expect losses if you invest in venture because they're inherently more risky than the public markets. If you invest, a stock might go down, but it's probably not going to go to zero unless you're unlucky and you invested in Silicon Valley Bank, say, or
Yeah.
First Republic, right? Whereas if you do venture, there's always a chance that it will go to zero. And so taking one angel bet or one investment and hoping that that's going to change your life is not very smart because you need a lot of essentially shots on goal, which is one of the reasons the fund approach is so useful. But here's the thing. If you've got a little bit of extra money as you're working in your 20s onwards, and you think of that as your sort of gambling money, if you like, not money you need to be safe, not money to pay the bills or to have a buffer if you lose your job, but any extra that you might say that you're willing to lock up for 10 years and hope that there'll be rewards from it. If you do that with the intention that you're willing to maybe lose a little bit of it, but if you keep doing it repeatedly, then what you'll find is that over time, not only have you got an excellent savings mechanism, but by having several irons in the fire, you will be spreading out potential gains over a long period of time in the future. And I think men have done this for a lot longer than women have. And as a result, by the time they're in their 40s or 50s, their wealth is magnitudes larger. So my attitude is just get started. If someone says, will you put $5,000 in my company or will you put $25,000 in my fund, have a go at it because you never know where it might lead. And if it is successful and it goes 5x, and you do it again and you do it again. The next thing you know, you've turned a few $1,000s into $1 million.
And you were talking about how to think about it as like the money that's not that, it's not a life or, live or, whatever. It's not money you really are required to live with. But, you can also use your retirement funds to invest in venture. And it's actually considered, especially if you're a little bit younger, a really important part of high growth, wealth creation over time. So, everybody's different in their tolerance and because of your age, et cetera, what percentage it should be. But it's a really important thing for you to be thinking about, even if it's through retirement funds. But let's talk about women's propensity to be more, I think, more as a philanthropist. I mean, that's more and more, I often hear people say, well, it's easy for women to be philanthropists. Traditionally that's what we've been sort of identified with.
Well, it's interesting. I heard someone call it this way the other day. They said that in a family, the man is often the CFO and does the strategy, investment strategy, and the woman is the controller and spends the money and manages the budget. And I thought, God, that's really interesting because actually that does feel familiar, I think, to a lot of people.
Sure.
But
Yeah.
it means that when you speak to someone, they go, oh, no, my husband does the investing. And I think that's wrong. I think you have to take command of the things that you care about and your passions. And the great thing about philanthropy, as you just alluded to, is that you can have for profit and for purpose, right? There's a fundamental tenet that I think really works. Without a profit incentive, in fact, many impactful technologies will not be developed beyond early research. And they won't reach the scale that is required to change the world. So philanthropy in that respect is massively important for different flavors and stages of the work and to fund early stages, as I mentioned. You'll get that before commercialization is really possible. But if you then use some of your philanthropic dollars to actually invest in for-profit businesses or funds that provide actual returns, then that can then be deployed again, right? You get the money back, you take some aside to give away in grants and to do the philanthropy for the areas that don't really have a full profit motive or where it's not appropriate. And then you put the bulk of it back in again. And that's how endowments get built ultimately. They're invested for returns, the endowment grows. It can then be done in perpetuity. And I think that individuals are not so aware that they have the capacity to do that too. They think once they've put money into a DAF or a foundation, they got their tax break, they sort of leave it alone and think somebody else is managing that money. And the truth is, trillions of dollars are sitting in donor advised funds at Fidelity, which are
Yes,
basically in the stock market where you have no idea where your money's going and
right,
whether or not it's even being
right.
used to
You could
better
have
your.
donor advised funds that are investing in private prisons and oil companies that are not aligned with your values.
So what I would love is I'd love to see people who think, oh, I don't want to invest, it's risky, or that's my for-profit pool and I don't want to use it. I'd love them to think about, oh, I give this amount away in philanthropy. Why don't I put some of that into investing? Then I can actually direct it towards causes I care about and help hopefully build catalytic capital. You've already expected not to receive a return because you took a tax break when you gave it into the philanthropic fund.
Yeah,
What happens?
imagine being able to invest 10 times more because you got great returns, right? Like, or donate 10 times more rather.
You're deploying the money into impactful businesses and it's doing good whilst it's growing. I mean, that's kind of the perfect
Oh my
outcome.
God, what a win-win, right? It's cyclical. That's fantastic. Thank you for giving that great visual example. Let's talk about the women who become investors in venture firms. We talked about the fact this is a moment when a lot more women, we have 1,400 women that have signed on to our New Table campaign to invest in venture for the first time. I talked to someone yesterday and she's like, oh, I put in 100,000 here, 100,000 here, and 100,000 in this other fund. Like,
Great.
3 funds. I have somebody else who input $500,000 into 5 different funds. So there are people who are really seeing this as, and they're saying to me, like, it has been such a sense of power and influence that I never thought I would have. Talk about what you see as the women's influence and impact and how it changes being an investor in a venture fund.
Well, the thing I'm told most often by my LPs, and this is male and female, is how much they love feeling connected to the companies that we backed
Yeah.
and how much they love to be able to help where they can with contacts if it's something that they know something about. But when they see news reports or something from the company, they basically get to say, oh, I helped that company get off the ground. And I've got investors that are in other countries and they're like, I helped that company get off the ground. And they feel very proud of that. If you're an institutional LP and you've been doing it for years, you're probably not going to get that frisson of excitement. But if you're a first-time investor in a fund, you're learning so much and you're getting such an incredible education in investing just because you're going to be able to ask questions, you're going to get the LP updates, you're going to see the financials, you're going to see some inner workings of how a fund works. You're going to get all of that education and you're going to get to see all these companies coming through. And one of the great benefits, of course, for LPs is that we see more companies than we can possibly invest in. If they're interested in a different subject area that we don't cover, but we've got something that might be interesting to them, I can say, hey, do you want to take a look at this? And so they feel like they're part of a network. And the whole point about sort of rising tides lifting all boats is that once you're in a network and you're learning from it, then you suddenly realize how useful you can be because you don't know what connectivity and what impact you can have until you're actually doing it. And so I feel like once women start investing and getting more comfortable with risk, and over time their familiarity breeds courage, right? And
Right.
that's obviously right.
Familiarity breeds courage. I love that. And I've seen it. So we started our first fund in 2020, 221 almost exclusively first time women investors from our network, with a couple exceptions. And within a year, we did a little survey, and 30% were investing in 2 and 3 other women's venture funds. Like, they got the bug. It made them feel confident, and their networks have expanded, their influence. Some of them are now advisors or board members for those companies. And they're really starting to feel like, oh, this is actually a place where I could play because it feels safe and there's an on-ramp that's appropriate.
That's my point about you don't know how valuable you can be until you're inside
Yeah.
the network. And you also don't know what you don't know. Like most people who end up in massive funds from 20 years ago started off small and they're in the funds now because they've been with you from the beginning. And so if someone comes in and says, I love climate, and then goes, you know what, I actually also really care about women's health, or I really care about childhood education, then by being in the network, they're going to be exposed to these other things that they're passionate about. And they'll find other funds to back. And so I think the thing I love most about it is that you get this sort of power by being inside with the lingo and the language. So we to a
Right.
lot, you're like, I don't know what these acronyms mean. I don't know what it means to get how to get started. I don't want to ask questions or look foolish. And it's like, well, if you just start, you'll find that people are usually incredibly supportive. After all, they're taking your money and they're very grateful for
Right.
you for backing
Right.
their fund.
Yeah.
They're going to help you with that education. And the next thing you know it as well as anybody else, and you're teaching your friends down the road.
Yeah.
And that's
And
how
and
impact.
And I
Yeah.
think in so many ways, we've created this mystery that it's complex. And the truth is, to be an investor in a venture fund, you don't actually have to know stuff. You just need to decide how much you want to invest. You need to pick someone aligned with your values, somebody whose thesis, hopefully you believe in, like Gabby's, but they're the experts. That's the benefit of investing in venture, is they're the ones who know how to do the work. You're getting to learn along the way. So I think that sort of decision, that sense of like, I could make a mistake, it's mitigated by the leader that you pick, of course.
Trust is everything.
It sure is. So as a final question for you, there's a wealth gap that exists today between women and men. What do you think that as women, what we can do to close that wealth gap, like in society? What are the solutions for all of us?
I mean, I think we've been talking about it this whole session. The obvious thing you can say is invest more for yourself to build your wealth, because when you have wealth, you have power,
Yeah.
and you have choice. And so you can then pay it forward, and then you can invest in other women so that they can then build their wealth. But the
Mm.
truth is, that's not charity or concessionary, as we've talked about. Doing this is just good business, because actually the results are provably better.
Yep.
When
Yep.
more women are moving more money and
Yep.
have the power to decide who gets the money, then we'll start to see the gaps closing. But I don't think we can sit there and rely on either regulation or other people to do it for us, right?
Yeah. No
Because we
question.
have to remove biases when you evaluate quality and all those inherent things that are there. But I think at the end of
Yeah.
the day, never underestimate the ability of a single individual to move mountains if they're doing it in concert with other people.
You're so inspiring, Gabby. Thank you so much for chatting with all of us today. I know all of you are inspired, both about Abby's journey and also the work she's doing in climate investments. This is, as you talked about, the CEO of BlackRock really said this is where all the unicorns are going to come from. So it's the super smart investing strategy. 25% of our fund 3 investments are in climate companies. This has got to be part of your financial strategy, to be part of the wave of everything. For anybody who's listening here, I want to make sure you know what resources we have available for you. At How Women Lead, we have classes on learning in more depth the difference between angel and venture investing and how to evaluate, et cetera. We also have a new table campaign. And what that means is if you're really interested in leaning in and investing, you can actually meet 54 women-run venture firms like Gabby's on that platform. It's gamified, values-based platform. You can say, I care about climate or I care about health. You can really play with it and see and meet those firms that are aligned with your values. I also want to encourage you to be thinking about, how are you considering this in your entire portfolio, and how are you leveraging this for your own power and influence for the other things you want to do in the world? You want to get on a corporate board? You're seen as somebody who gets it and is in the game and knows who the players are when you invest in venture. Like, there's a lot of other benefits that come out of this. And if you're wanting to intimately meet and hear from more venture firms and other LPs and founders, even, we have a monthly event. It's super accessible. I hope all of you will really take it seriously and set a goal for yourself about either learning or just stepping across the line and starting to play in this asset class. In the platform, most venture funds allow you to invest with just $25,000. And it's usually spread over four or 5 years. And so, it could be $6,000 a year. And it could be retirement or donor advised funds like we talked about. So check out these venture firms. Be careful of the assumptions you're making, because a lot of us just haven't had exposure to really understand how it works. Thank you, Gabby. And thanks everyone for tuning in today. Look forward to partnering with you and changing the world and making climate solutions fully funded so we can really solve for the problems that unfortunately we were part of creating. So thank you. Thank you, Gabby.
Thanks, Julie. Nice to see you.